talk about mortgage rates because I think there's a lot of misconception out there, right? Like people think, oh, the Fed rate's going to come down and then rates are just going to pile downward.
Right.
It doesn't happen like that.
So first and foremost, thank you so much for having me on. I'm excited to be here. Exactly like you said, it's great to stay in touch with the Fed rates and watch Jerome Powell, like his talks, but that doesn't mean that the mortgage rates are going to come down.
Right. It's a pendulum. So for example, he may announce there's a 25 basis point cut, but most of the market is already predicting that will happen, and it's already pricing it in, right?
Right.
Rates have already softened to the point where most of that 25 basis point for mortgage rates, because what the Fed rate really is, it's more the short-term thing. The Treasury yields and bonds are what really dictate mortgages, and there is a trickle effect where, if we continue down this path of lowering the Fed rate, where eventually you would expect that it should, for all intents and purposes, pull down mortgage rates, but it's not a guaranteed lock. It's not a guarantee. So where it will immediately affect you is probably like credit cards, lines of credit, those fluctuating things. It'll pretty instantly hit there, but certainly some of it gets priced in now. If he did a 50 basis point cut, because that's not expected, then you might see some really quick drop in rates because the market wasn't expecting that.
Correct. It's just a good way to see how the market is doing, how it's trending, and you would assume, like you said, that the mortgage rates should fall.